and this presentation is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have NinjaTrader brokerage related questions, they should be directed to the NinjaTrader brokerage directly. You can call the number 312-262-1289, or you can email brokeragesales@ninjatrader.com. All right, thanks for filling out the poll. It looks like most people in the room are using the ecosystem for indicators and strategies, and then there's a large majority of you who have not actually used our ecosystem website. So the ecosystem website has new tools that are usually added every day. The NinjaTrader ecosystem is home to hundreds of apps and services, and you can quickly and easily search for the services that you're looking for with simple keyword search on the new website. You'll also find information about our upcoming webinars, like the one you're in today, and a video archive of all of our previous events. Here's a link to the ecosystem. Also, if you are active on social media, please ensure that you follow NinjaTrader on Twitter and Facebook. That's the best way to get updates about all things on the NinjaTrader ecosystem. And NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure that you're using the latest version of NinjaTrader and to pick up a free live data trial, you can take a look at the following link. And if you're already committed to using NinjaTrader, if you wanted to understand, purchase or lease a live license key to trade a live account, you can take a look at our purchase options here. And if you're just getting started with NinjaTrader, we do offer free live training webinars on a daily basis. If you are curious about viewing those events, you can take a look at the schedule at the following link. All right, so with that being said, we are very excited for this unique event today to join Vlad Karpel, the CEO and Chief Architect of Tradespoon, as he demonstrates how to make price predictions, how to learn from performance of these predictions, and how to use that data to improve on future trades. Vlad will discuss optimal forecast session highs and lows for ETFs and stocks. Then he'll explain how they can help determine entry and exit parameters. So again, thank you all for your attendance today, and without further ado, it is my pleasure to welcome into the NinjaTrader webinar room, Vlad Karpel. Go ahead and take it away, Vlad.
Perfect. Welcome everybody. How's everybody doing? Just want to make sure you guys can hear me, and I'm going to share my screen, and hopefully you can see my screen shortly. Let me know if you guys can see my screen and you can hear me. Just type in yes, as Ryan said. And great, Ichi. All right, so it seems like everybody can see me. See my screen, can hear me? Great. Again, wanted to welcome everybody for this event. Thank you to Ryan and NinjaTrader for having me on this event. And just out of curiosity, let me know if you guys are familiar with Tradespoon. How many of you are Tradespoon subscribers? And just say yes, I'm familiar, or if you're not familiar, just say no. I always want to welcome Tradespoon subscribers and everybody who's new to Tradespoon as well. Several yes and several not yet. Okay, good. All right, so hopefully you guys will find this information helpful, informative, and will help everybody to trade smarter. So today I'm going to talk about how to improve performance of your trade entries and exits. For those of you who are new to Tradespoon, if you haven't experienced Tradespoon, this is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. For those of you who are not familiar with Options Express, well, Options Express was an online broker-dealer, both options and futures and forex. Options Express went public in 2005. At some point, it was worth over $2 billion, so I'm very proud of that experience. I was their first employee, was in charge of building a platform for retail users to trade both futures, options, and stocks. Since I left Options Express, I worked as an investor and consultant in several technology companies, several financial startups here in Chicago, Groupon, MediaOcean, several hedge funds. That's where most of my experience comes from. I'm very thankful to Tradespoon, and Tradespoon subscribers gives me opportunity. Tradespoon gives me opportunity to have flexibility in my schedule and look for supplemental income. Everybody on this call ultimately have different goals. From a professional point of view, Tradespoon allows me to manage my own money and trade. Friends and family found I've been doing that for over 15 years. Mentor and teach Tradespoon subscribers how to trade stocks, futures, options. And my background is artificial intelligence and computer science, and I've been, we have a team of financial engineers that have built models and enhanced our existing models. Everything we do at Tradespoon based on statistical analysis, and that's kind of what I wanted to share. Ryan already showed this NinjaTrader disclosures. I want to make sure that you guys get a chance to look at the Tradespoon disclosures. Trading stocks, options, futures involves risk and are not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions, since everybody on this broadcast have different goals and different risk tolerance levels. Also, should not be assumed that the future trade picks will be profitable or will pass performance. I'm going to show you some of the technology and how to analyze, we'll concentrate on the futures, and you can see disclosure about future and forex trading. Out of curiosity, also, do me a favor, let me know how many of you trade futures. Just type in, if you trade futures, just type in future. If it's forex, forex. If it's stocks, stocks. But if it's all three, just type in futures, stocks, and forex. My understanding that most of the attendees trade futures and forex. So if that's the case, I want to concentrate on those examples only. But if people are trading options or stocks, okay, then I want to spend some time on that too. Okay, perfect, futures and forex. That seems to be most of the case. All right, so you need to know these 7 pillars that you can find actually the video on Tradespoon archives. But first you need to decide what to trade. We addressed that first question. Most of the people on this event trade futures, maybe options on futures, forex. But whatever that asset class you're trading, you need to make sure you feel comfortable with it. If you're trading commodities, oil, treasuries, gold, how, as indexes, how do they correlate to the interest rate decisions, how they correlate to the taxes or tariffs that have been broadcasted today. So when there are a lot of news in the market, you need to know how these different asset classes and products correlate to the news. The second is once you pick what to trade and you answer that important question, position management. Very important to know when to close the trade, when do you enter the trade, when do you exit the trade, and have different tools. And just out of curiosity, how many of you have a trading plan? Written down trading plan that actually tells you, when do I enter into position, when do I exit the position, what is my maximum loss, what is my maximum gain? Just wanted to see what kind of level of experience you guys have. All right, so Carol Dean said yes. Perfect. So you guys know exactly before you get into the trade what your maximum loss and what your maximum gain is. Great. All right, Richard. Okay, so most of you said yes, so I think we have a room of more experienced traders. There are a couple no's, maybe 1 or 2. All right, so hopefully I'll show you my trading plan and see if this is something you can adopt. But you want to make sure you don't chase the market, right? We had a FOMC decision, interest rate decision yesterday, a little bit hawkish tone. Affected the interest rates. We had up and down reaction. Regionally, bank stocks went up, interest rate went up, then interest rate sold off, financial sector sold off today. We had additional tariffs being imposed on Chinese products that caused, probably the biggest sell-off since the February. We're retesting the March lows and probably going to retest February lows. So it's very important to make sure you don't chase the market. When the market is overbought, you know what that overhead resistance is and how to hedge your positions. If market is oversold, as kind of what we're seeing right now, it's kind of late to hedge your position. Buying, calls, you have to take that contrarian view. So it's very important not to chase the market and kind of follow the trend as as the sell-off we happen today. Be patient, maintain a long-term focus, right? That's the fourth pillar of successful trading. You need to make sure that you have your short-term goals, long-term goals, have an opinion about the market. Are we in a bearish market? Are we in correction? Or is the 9-year-long bull market is still continuing, potentially continue at least till the end of the May as we approach in the earnings season in April. Then managing and hedging your position, looking at your overall position delta if you trade in options. If you trade in future, how much exposure you have to if the market goes up, how much exposure do you have to the market down, what is your maximum portfolio drawdown across all your positions, and how to manage risk, position risk and reward. Whatever your technical indicators, whether you're using Ichimoku Cloud, whether you're using moving averages, whether you're using some statistical forward-looking predictions, unusual options activity, whatever your favorite signal is, you have to write it down. You need to make sure you follow those rules, and the risk and reward is favorable, right? Right now, market sold off. We're approaching the February levels. Potentially, there is still some downward pressure, but the downside risk maybe is limited, but the upside risk is much higher. So potentially, by looking at the different technical indicators, whether you're looking at the Bollinger Band, your reward will outweigh your risk. And whatever the technical indicator, you always have to write it down, that signal that triggers your decision to get into the trade, and you need to write down what the risk versus reward ratio is, and make sure you do this ahead of time. Ask the question, how many of you, before you get into position, know exactly what your maximum loss is, what your maximum gain is, and if you are a disciplined trader and you have a strong trading plan, you follow that, and if you don't, you want to make sure that you follow that rule and always stick to the rule in terms of risk versus reward, and make sure it has a favorable setup. So today I'm going to show you, since most of you trade in futures, I'm going to try to concentrate on futures and options. This slide shows you that everything we do at Tradespoon is based on statistics. So we have historical data for ETFs, Forex, futures. We analyze the data and we make predictions. And unlike any other firms out there, we operate as any major hedge funds. We want to level the playing field and provide you statistics. So every time there is a signal, we tell you, based on our backtest, every time the signal occurs, what is the probability of that signal be valid, and then what is the accuracy. 8 out of 10 times the signal works, 5 out of 10 times signal works. And for short-term trading, we're actually able to achieve up to 90% accuracy on our signal. We'll show you that shortly. So this is stock forecast toolbox, also futures forecast toolbox. The model that we use for predicting stocks and futures and forex are absolutely the same. So you can see it on your screen. And as I said, there's no other retail product like this on the market. It shows you real-time predictions and support and resistance level for the next hour and for the next 10 days. And just out of curiosity, how many of you are basing your decisions on technical studies? I assume futures, everybody makes decisions on technical indicators, but maybe not. Maybe you guys do look, it's a news-driven decision. Let me know what those technical studies are. Some of you said Bollinger Band, someone says simple moving average, exponential moving averages. And how many of you do not know what support and resistance level is? When you look at the candlestick chart, what is support and resistance? If you don't know what is support and resistance, just say, I do not know. If you do know, if you do understand support and resistance, just say yes. Because I don't, I kind of assume that, most of you guys are more advanced. Okay, Fibonacci retracements, RSI, SMI, MACD, yes, yes, yes. All right, so nobody said no, so I'm going to skip the explanation of support and resistance, just assuming you guys understand. So there's different ways to find support and resistance level. Some of you said MACDs, some of you said RSI. You know, you look at the simple moving average, exponential moving average, if you want to give more weight to the most current data. And so we basically have our own technical studies that, unlike historical data, most of the studies that you guys mentioned, such as VWAP, standard deviation, they rely on the historical data. They look at the historical data, and based on the volatility in the past 50 days, 60 days, 6 months, they make extrapolation what, you know, one standard deviation move is, what is a 2 standard deviation move. We have artificial intelligence that looks at the historical data, but it makes future forward-looking predictions based on the data, right? We've this tool that you see on front of your screen makes prediction based on the wave analysis. It looks at the wave analysis, see which waves are noise and which waves are actual trends in the market, and then provides you with specific predictions. So before I get to the trading plan, I want to make sure you're probably at this point asking, you know, this is all great and wonderful. Let's see some examples. So this is Tradespoon. If you haven't seen Tradespoon, this is a Tradespoon. I'm going to tell you, you know, I'm going to make sure stick around till the end. I'm going to give you ability to get to a 30-day free trial. You know, we're not asking for any information, no credit cards. We want to give you a chance to look at the trial, take a 30-day trial, and see if this is something that you find useful. I'm going to usually concentrate on 3 examples. I know you guys are commodity traders, so I assume some of you trade gold, some of you trade oil, some of you trade S&P mini indexes, not the gold, but indexes. So I'm going to concentrate on those examples. How many of you trade gold or oil or S&P mini? Just type in yes. If you don't trade any of these asset classes, tell me what you guys actually trade in. All right, so Vasily, yes, S&P mini. All right, great. NASDAQ, perfect. S&P mini, perfect. All right, so most of you trade in S&P mini. So this is futures forecast toolbox. You know, if you do decide to take the trial, under quick navigation, you'll be able to see we have a Bitcoin, futures, stock, forex. All 3 tools based on the same model, just underlying data is different. Something to keep in mind. So here I type in gold, right? It's a little bit different format as you guys are used to your broker dealer or to, you know, NinjaTrader, you know, but basically this is gold. It tells you it's a gold futures. M stands for months. We're talking about June expiration, and then exchange in which it's trading. So basically what it does, and it's the same information you can see here. If you use it, stock forecast toolbox, you can type in oil, right? So here I typed in oil. This is oil, April contract 2018, trading on NASDAQ, NYSE exchange, and gives you different information. The most important information for day trader, if you're a day trader or a longer term trader, you want to see what the predicted low and predicted high. So the model runs at 6 p.m. Central. So last night, the model ran and basically posted the results. It said that the key support resistance level that you should see in the market is 62.21. Today market sold off and the oil reached 62.08. So it came very close to the predicted low, and then going back to the 7 pillars of successful trading, you need to look at the most favorable risk versus reward ratio. At 62.08, basically model says that there is a higher probability to trade and go long, because there's not a lot of room to the downside, and you have a potentially $1 move to the upside. And you can see that oil actually ended at $63.42 today, right? And it also shows you overall trend in oil. You know, today we had a positive vector. For today, oil has been rebounding from the oversold condition. This is a chart that looks for the past 3 months. It basically tells you on any given day what was the close price and what was the predicted price. So you can see how accurate the model predicts the low and high ahead of the time. And you can actually, on this example, we don't have the model on oil because oil obviously by nature have different expiration months, and they don't have, they have limited history. But USO, which is an oil fund, right, highly correlated to the oil prices, but it's an ETF that doesn't have expiration, it actually gives you a model grade. And what does the model grade A means? It means that out of the universe of stocks that we've analyzed, and the stocks are volatile, or ETFs or indexes are volatile, and they have historical information, 80% of the time, 8 out of 10 times, when the low is reached, when we predicted low to be 1293, the ETF or futures will close above. And you can actually see, despite the sell-off, we are accurately predicted the low, even though we had unprecedented low, and the oil closed, 2 cents above the predicted low. So you can use that to extrapolate how the oil will behave. I'm just cutting the symbol so I don't forget. How well the model will do on predicting the oil futures, right? So to summarize, we're giving you the trend. We've seen that oil has been in downtrend for the past couple months. So right now, the overall trend is to the downside. This is for the next 10 days. Average trend is down. For today, we actually predicted a positive day, and we actually see that oil is actually closed slightly higher than the predicted price. So as a day trader, you are very important for you to make sure that you're following these low and high. When I day trade, like for today, whether I trade VIX or I trade S&P Mini, right? Let's look at the S&P Mini. Very important to establish your position at predicted low. People ask me, Vlad, how do you trade this? I usually look for favorable risk versus reward, and I buy near predicted low, especially if the trend is positive, if the prediction is positive. If the prediction is negative, this is estimated change. This is I'll estimate what the average price movement will be for today versus yesterday. And if it's negative, ideally I want to go short. And you can see today oil was at 63.42. If you go short at 63.81, then it makes sense. At 63.81, the price is overbought. You also can superimpose, since most of you day traders, I assume you look at the 5-minute candlesticks, maybe 2-minute candlesticks. So the same information you can do with intraday price, intraday predictions, right? So you can actually see when the market open and oil prices are still open, every 5 minutes the price gets updated and we are predicting. So you can look and see the trend. Right now there's not much movement in oil market, so it's kind of flat. But when S&P Mini market opens, or when European session opens and you trade in 4 o'clock, how many of you actually trade 4 o'clock in the morning? Just wanted to, out of curiosity. A lot of people complaining that during U.S. market hours, futures are, very unpredictable with all the news. So they are very happy and they trade 4 a.m. Chicago time. Any of you are up since 4 a.m. Chicago time or New York time? Not a lot of people. Okay. But so that's basically, all right. So Andy, yes. Ken is yes. All right. So Andy, Ken, tomorrow at 4 a.m. Central, you will see every 5 minutes as the underlying prices move, you will see the predicted low. And the way I interpret this information, again, the low and high is very important. Ideally, you want to buy at predicted low and sell at predicted high. And then you want to look at the trend. Right now, trend is kind of the same, right? But that was very important to look. And same thing with the 10-day prediction. You kind of want to trade with the trend and want to make sure that as you trade with the trend, you always, buy at the predicted low and sell at the predicted high because the market is overbought. So this is a gold. This is our futures forecast toolbox. Slightly different UI, but nonetheless same interface. Looking at the gold today, same thing. We predicted 1320 to be the low for today for gold, and that was posted since last night. And you can see it didn't come close to the predicted low, was at 1330, but nonetheless, it did close within the range, right? The predicted high was 1331, so it's close 2 points above the predicted high, but you can clearly see as the commodities trade, gold, futures, oil, S&P Mini, as they trade, it's very important to know what the support and resistance levels are. And out of curiosity, to make sure we're on the same page, let's type in GLD for ET. Look at how well the gold is doing. Let's type in GLD as ETF. And I usually type in ETF. Very important distinction. ETF, GLD, I don't know when the inception, but it's been trading for the past 20 years. So for longer term trade, I can establish the model grade. For the futures contracts, since they have expiration cycles, I only have limited amount of data, right, for as long as this contract is live, 3-6 months. So then it doesn't have historical data. So I look at the model grade B to tell me, again, how often the model is correct, that when the low is reached, that the underlying asset class will trade above that low, right? And just want to confirm, how many of you are using any statistical analysis or any technical indicators that actually tells you what is the probability of that signal to be correct? Some of you said, I'm looking at the MACDs. Some of you said RSI. This is all great and wonderful, but when you do look at RSI, and RSI reach oversold level at 30 or overbought level at 70, 75, how many of you have any software that actually tells you when gold reaches RSI 30, it rebounds back, or when oil reaches RSI 70 or upper Bollinger Band, it rebounds back? All right. Ellen said none. Okay. Ryan, VWAP tells you statistics. Okay. That's good. Anybody else? So the reason I ask this question, because this is, especially for futures trader, it's very important to know what that statistical analysis is. And I'm not sure about Ichimoku Cloud. I know that Ichimoku Cloud gives you the bands, but I don't think Ichimoku Cloud will differentiate between oil and gold. And it's, obviously Ichimoku Cloud studies are different for different asset classes. For gold, it might work 90% of the time, but for oil, it might work only 20% of the time. So unless you know exactly the signal that you're using or the studies that you're using, how well they behave, how well they predict different asset classes, you kind of run in blindfolded. So it's very important when you do use this technology, you actually look, and you can see gold, we're actually 64%. So that might not be enough for you to base your decision that at 124 you want to buy this. But if you look at the oil, right, well, this model grade A, and it's 80% of the time. So this model works better on oil than it is on gold. So maybe it makes sense to buy it at 80%. Somebody said about euro, same thing. You can type in euro, ETF, and you can see, well, the model grade is B. If euro reaches 118.23, then 70% of the time we are predicted that the euro will close above that level. And you can see we predicted 118.23. This was posted last night before the market opened. And you can see 7 out of 10 times the euro will close above 118.23 that we predicted, was the estimated change. And we do have a Forex product. Somebody asked me about the Forex. We do have Forex product. The trial that will give you access to our tool. And it's the same thing. You can find a different pair, euro, US dollar. It's probably the most common pair. And it will tell you what how many pips currently trading. Euro is at 123, 5 by 06. And you can also see the trend. And the way I would use it is the same thing. I would scan the close prices. Right now, I don't see a lot of, going 12, 9, 12. There's not a lot of conviction. It's kind of red and green. So I analyze the close prices for the next 10 bars, each bar being 5 minutes. And now there's not a lot of conviction, not a lot of action going on in euro market. But you can switch to our predictions and see if it shows that there is slight downtrend, right, in euro. Euro sold off with the market, and you can see this downtrend, and potentially the downtrend will continue. And then you can switch to one-day predictions and see, that euro has been, trading in a range, right, since February, kind of trying to figure out, is it going to break to the upside or sell off with a stronger dollar. So that's how you would use our Forex product. All right, so the trading plan that I usually use, and yours might be different, but in our live trading room, we do have a live trading room. I usually trade stocks and options. We do trade Forex on Wednesday, but our trading plan is this following. I usually commit half of my trade size at the predicted low. So all my decisions are based on statistics on our tools. I find the predicted low for gold or for oil or for S&P mini, and if I see this market reaches a low, predicted low, and I see that the vector is positive 1%. Vector is defines that estimated change that you saw on stock on futures forecast toolbox. Then I would go long. If I want to short, I would short commodities or short asset classes that reach the predicted high with vector being negative 1%. That makes sense, kind of a contrarian view. At low, I know there is little room to the downside, but there is higher room to the upside, and you can set up 1 to 1, 1 to 2, 1 to 3 risk versus reward ratios. So I would go short if it reaches the high with negative vector. Usually I commit 50% of the trade size once the stock reaches my entry price, right? So, and the reason we're doing this because, well, gold and oil, we did pretty good job in predicting. Let's look at the NASDAQ. That kind of expired. Let's see. So let me go back to futures. Forecast toolbox. Let's run it. So we predicted 2706 on S&P mini to be the low, and as everybody knows today, because of the FOMC decision and because of the tariffs, the market sold off. So the model, could not. The model ran last night. It did not know about the events that happened today and happened, last night because of the volatility. So you can clearly see that it did not do a good job in predicting such a large sell-off that we had in the market. But it doesn't mean that you could dismiss the trade completely. 2706 is now becoming kind of an overhead resistance, and that will stay as an overhead resistance for S&P mini. So it's very important to make sure that when in our trading plan, this is the reason why I look at the futures data, making sure that there is no sell-off, or to protect myself, I usually put half of the trade at the predicted low. Right? And if the stock market sells off another 50 basis points, another 0.5%, then I would enter the second half of my order. I usually have a stop loss of 1%. I usually look for 1% gain, 1% stop loss. But because I'm buying at predicted low, I have statistics that tells me 7 or 8 out of 10 times I would be correct. So even if it's 1-to-1 risk versus reward ratio, as long as I'm 80% or 70% accurate, then you can see your overall portfolio should have positive effect. Some of you said options, so obviously you can trade options on the commodities. You can trade S&P mini options on the futures, on oil, and on gold. So this is more relevant for stock and option trader, but ideally, you never want to commit more than 5% of your capital. So it's very important when you do get into those trades, especially with futures, you have forex, you have your stop losses. You don't jeopardize more than 5% of your portfolio into any given trade. That's the maximum loss. I usually try to limit my losses to 2% of the entire portfolio. I do check, if you trade, if some of you trade since 4 a.m., so that's not very relevant. But if you do come in at 8:30 before market opens, you want to look at the futures data, right? You want to look at the news are very important, especially for futures trader. News, you don't want to trade right at the news because it's very hard to predict the outcome of the news. Very hard to predict what ECB decision, what the outcome of ECB decision. Very hard to predict what would be the effect of Donald Trump speaking on the tariffs on China. So you don't want to have a lot of exposure to the market during these events, right? Potentially, if you're trading options on futures and you sell in out of the money options, with delta 30, delta 20, potentially that's a good strategy that a lot of people utilize using options on futures. But futures themselves that give you a lot of leverage, and ultimately you don't want to have more than 5% losses in your trade. If stocks or futures are down more than 1%, pre-market, then you want to make sure that you keep in mind the predicted low and high, right? Today, the gold and oil was very good in predicting low and high. It makes sense to rely, but we've seen, over 2% sell-off in the market, and then if you see that sell-off before the market opens, then you need to know that looking at the low and high, you have to be careful, right? It gives you statistical analysis, 70% accurate, 80% accurate. Nothing is 100% accurate. So it's very important to keep in mind that if you see rise in volatility, right? If the S&P volatility went from 15 to 25, and you have that 50% jump in volatility, then the range defined by the predicted low and high will also have to expand. All right. So just some of the other tip points for when you do use the futures forecast box or stock forecast toolbox. Low and high is very important numbers. They reflect volatility, right? You shouldn't expect that the underlying asset class will move more than the range defined by low and high. Usually I look for 50% as my cue that's your maximum gains. You want to buy close to the predicted low. As you can see on the model, ahead of time it tells you, buying at predicted high, you overpaying. You overpaying, and more often than not, the result will be in the loss. If you sell at the predicted low, same thing. More often than not, the trade will go against you. You can actually see statistics. It will tell you what the probability that this trade will go higher or lower. Sorry, sound. Ryan said sound is cutting in and out. Just want to do video and audio check. Let me know if you guys can hear me and you can see my screen. I want to make sure that somebody is good. All right. So sound is good. Chris, Ryan, perfect. Okay. All right. I'll try to speak a little bit louder. You want to trade with a trend, right? For me, I always look at the 10-day prediction. I want to know what the predicted low and high for today is, because those are the key level. If I want to look at a different chart, right, look at the shorter time interval, then I would switch to the 5-minute predictions and make sure that the 5-minute predictions confirm the trend and confirm where I'm going to. And as a futures trader, I think it's very important to use tools like that because they just give you another confirmation signal. You might use Ichimoku Cloud and you might use VWAP, and all that is nice and wonderful, and I like that. But statistically speaking, if you have two different signals or two different models that give you the same signal, then there's a high probability that your trade will go in the right direction. So even if you use VWAP or if you use Ichimoku Cloud, I do not encourage you to buy S&P Mini at 27.91. Well, this is a bad example. Let's go back to the like euro, right? You don't want to buy euro when it reached 119.30. That's the estimated high. It's probably overbought. You more often than not you will lose money. Even if Ichimoku Cloud tells you to buy euro at 119, do some paper trading, do some analysis. You're much better buying euro when it's close to 118.23. And that can make a difference between a successful trader and unsuccessful trader, right? When we talk about being more correct, you need to make sure that you trade with statistics, right? And even if you can save, 50 basis points, 20 basis points on the entry and 50 basis points on the exit, that can be different between being, accurate with your predictions or being inaccurate with your predictions. So we talked about trend, exit, right? Exit, I'm sure most of you are familiar with OCO orders, bracket orders. I think for futures, very important to have a stop losses, because you have over leverage. So very important to have your stop losses. Again, difference defined by low and high. Usually that's 100%. That difference could be your stop loss. You can use this model to see the difference between low and high and making sure that that is your stop loss. If the market drops below the difference between low and high, then you have some kind of a reversal in the trend and the market is about to sell off. Follow volatility, right? The difference between low and high, just like Bollinger Bands, the difference between low and high predicted by the model reflects volatility. If there's very little difference between low and high, volatility is very low, right? As a future trader, you should expect kind of a contrarian view. When volatility collapses, it will probably expand, and when volatility expands, when VIX jumps to 25-30 level, most likely it's going to collapse and revert back to its historical mean 2018. So examples of long trade and short trade. This is stock examples. Don't want to waste your time on stocks, but again, you can go into futures forecast toolbox, enter the price, and exit. I'm very proud to announce, kind of our partnership with NinjaTrader. So I'm showing you NinjaTrader 8.0. We do have an add-on inside of the NinjaTrader platform. So you can always go into a NinjaTrader, and I'm not sure if you can see this on your screen. But okay, perfect. You guys can hear. So I just want to kind of pick up where I left. So we have built-in integration with Ryan. Thank you. I appreciate your feedback. So this is NinjaTrader platform. Hopefully you guys are familiar with NinjaTrader 8. So we have built integration, and we'll give you the 30-day free trial of, if you have NinjaTrader. I think there is a free platform. If you use delayed data, or if you're already a NinjaTrader user, you can download NinjaTrader, and you'll be able to download Tradespoon add-on. Once you install both software, it requires kind of both installation. You first install NinjaTrader, then you go and install Tradespoon add-on. You can go new and say Tradespoon Scanner and Tradespoon Report. Tradespoon Scanner right now only works for stocks. Most of you are not interested in stocks, so I'll skip that. But Tradespoon Report, you can basically type in a future, right? You can type in oil future or S&P or any futures, and it will basically gives you our prediction. The same prediction that I showed you on the side for oil, right? Buy at 62.21, sell at 63.42, and this is an overall strategy for today is a buy signal. This comes from the Tradespoon, whether using Tradespoon platform or using a NinjaTrader platform. So you can write a report, you can type in any symbol, and then you can pull up a chart, right? You can pull up a chart. This is gold, June 18 contract. This is a little bit different format. This is NinjaTrader format. You can pull up a chart and you can add an indicator, right? You can right-click and say indicator, select Tradespoon indicator, and right inside of the chart, it will give you the 10-day support and resistance level, 1-day support and resistance level. It will show you, what were predictions in the past and how well we were predicting the low and high, and what are the predicted low and high for the next 10 sessions, right, along with the green arrow. Someone said, well, they're not sure if this is good for day trading. I think as a day trader, you should know what for today the low is and the high is. And you can definitely, as you see in my example, you can switch to 5-minute predictions. But I think it's very important to know what the session low and high is going to be. And as you enter in the session low and high, which usually happens several times during the trading session, this is your opportunity to have the most favorable risk versus reward ratio. You can see I put up a future, gold chart. You can see how accurate the predictions were for gold, for oil, predictions for the low and high, along with this, green arrow means a buy signal, right, for the oil, and S&P median. S&P median, wasn't a good prediction, and usually that happens during these outlier events, like, Donald Trump makes a speech, and instead of $60 billion, it's going to be $100 billion worth of tariffs, and all of a sudden market sells off. So obviously the model will need to adjust. There were no news. When there's oil inventory number being announced on Wednesday, then oil will trade potentially outside of the low and high. If there's a surprise in the oil inventory numbers. So you got to know what asset classes you're trading and which news will drive them outside of the predicted range. There's always these, and in futures market, usually these news, you usually know about them, right? Everybody knew when there will be interest rate decision. It was 12 p.m. Eastern on Thursday. And unemployment numbers come out on 7:30, Friday, or Donald Trump will give a speech at 12 o'clock. So most of these events, when they happen, and you probably want to avoid them, right, being exposed. And otherwise, most of the other time, there is no events, and you can see the oil and gold predictions were accurate. All right. It's 4:05. I've been talking about how much? Hello, 50 minutes. So let's do. Oh, before we do questions and answers, I want to make sure that, as I promised, you get a chance to. If you're interested, you can go to tradespoon.com. NinjaTrader. NinjaTrader is called. So if you go to NinjaTrader, basically gives you a 30-day free trial of our software. We don't need credit card. This is 30-day free trial. You can use futures. You can use forex, stocks. Our toolbox. You will also add on the ETF, right? Once you take the 30-day free trial, all you would have to do is go into our platform page, right? You go to platform page, and I think Ryan already referred to these links. You select NinjaTrader, right? NinjaTrader integration, and it will tell you about our NinjaTrader integration. Where's NinjaTrader? And kind of give you all the proper links, right? You already find all the proper links. You download NinjaTrader software if you don't have it. Data if you need, data feed, and then you will download Tradespoon add-on. And you actually, with this link, usually we give 7-day trial. With this link, we feel like 30 days would be a more appropriate link. So I'm going to type this into chat box, tradespoon.com, NinjaTrader. This is your 30-day free trial. You can use our site if you're not a NinjaTrader user. If you are a NinjaTrader user, then you'll be able to use the add-on. And I kind of give you 2 different platforms. They show the same results. So ultimately, you can use both. So can you demonstrate how to trade on 5-minute gold futures chart? So let's go back to the futures forecast toolbox. Let's do futures. We have futures forecast toolbox. So the way I would trade, that's the question was, how do you day trade on 5 minutes or less on gold futures? So usually I would look at the gold futures. Let me look at the gold futures. I'm picking the June contract. You guys can go pick different contract. So I look at the predicted lows, 1322 and 1337, right? So these are my cues where I would want to trade. Gold today was as high as 1340 and as low as 1330, right? Looking at the June contract. So I would buy at 1330, near 1330, and I would sell near the 1340. If you're looking at the 5-minute chart, you would switch to the 1-hour prediction, right? You would switch to intraday predictions, and it basically shows you 5-minute predictions. So same thing. Right now, gold is not very volatile, so you would buy at 1334.05 and potentially sell at 1334.60. Once you move 55 cents, that's where you would go short on gold, right? So for day trading, same thing. Ideally, you want to buy with the trend. Right now, gold, there's not a lot of. Right now, I don't see a trend. It's kind of neutral, right? Up, down, up, down. I'm looking at the vector. So ideally, you buy at 1334.05 and you sell at 1334.60. Buying at 1334.60, you're probably overpaying for gold. So, Ryan, thank you for posting the link. KW, thank you for the question. Let me see if there are any other questions. Ryan G, thank you for your feedback. Let's see, let me see. Are there any other questions? All right, check. What happened? Sorry, okay. Let's see if it's good. Okay. Looking for more questions. Regent, same process for Forex, yes. So the question was about the Forex. Forex, same thing. I would go into a Forex. And this is actually a perfect system. If you already have a Forex system, you already use whatever technical indicators you have. Always, pick a pair that you're trading, let's say Euro, US dollar, same thing. If you're trading on 5 minutes chart, 5-minute candlesticks, right now Euro is 23.05, 25.360 market, there's not a lot of volatility. But in theory, you can't really scalp much. But ideally, you want to buy at 2300, 2300. This is when you want to buy, and you want to sell at 2310. Right? That's your 10 pips. Probably right now the model shows you there's not more volatility than about 10 pips every 5 minutes. Unless there is an event. Once the markets, once the Asian market opens, once the New Zealand market open, then volatility, and European markets will open, volatility will pick up, and it will be reflected in the low and high. But that's the idea. You want to look at the trend right now, slightly downward trend in euros, right? 2304 going to 23.99. Not a lot of, but slightly negative bias. So if it's slightly negative bias, if futures tick up to 2309, right? If it ticks up to 2309, 2310, then potentially you want to go short. Right, at 2307, you want to be patient. It goes up by 3 or 4 pips, then you go short. Alan, if you purchase Ninja, still have 30-day trial? Yes, the two, right. So whether you have NinjaTrader or not, that link that I gave you, you have a 30-day free trial. If you have NinjaTrader, the good thing, you don't have to go between two systems. Within the NinjaTrader, you can load the add-on that I showed you, right? And then you can use within the chart. You don't have to leave two platforms. If you don't have NinjaTrader, Ryan will probably say you probably should have NinjaTrader, but I have to be careful with the compliance. So okay, so then yes, so the 30-day free trial gives you access to the chart, to all these tools. What is the price for your info, Larry? I only trade futures. So 30 days is free, no obligation. After 30 days, yeah, you would go to pricing page, right? You go to pricing page, and you can see the annual prices. You can do either annual or monthly. And you would want to pick tools membership. Tools membership basically gives you access to futures and forex. Since most of your futures and forex, you want to pick tools membership. So this is the trial. All right. Ryan, do we use average true range? We don't use traditional technical indicators. Our software works on predictive analytics, and it looks at the decomposing the waves, right? It looks all the trends, especially in the futures market. These are waves, right? If I look at the futures data, it's basically, and I decompose them. They usually trade as the, there's some kind of wave, right? So the model sees this wave, and it sees which waves are the trend, which waves are the noise, and makes prediction based on the wave analysis, not on the mathematical formula of average true average ATR. So subscription, I talked about subscription. What is, all right, Brian G, thank you for your feedback. All right, any other questions? I think we're about done, right? It's been an hour. So I really appreciate your time. Let me just type in this link, NinjaTrader, right? Tradespoon NinjaTrader, easy to remember. Want to say thank you to Ryan. I really enjoyed giving the presentation. As you see, I come from the family of teachers. My mother is a piano teacher. My sister is a physics teacher. Surrounded myself with PhDs in mathematics and physics. So I enjoy teaching. You can see a lot of free content, educational content on Tradespoon's site. Hopefully you'll take a look at this. We do spend a lot of time on options. If you want, especially on futures, options on futures can be give you, just additional hedge or additional ways to trade. And we teach options. We teach futures. A lot of educational content on the site. Hopefully you will find it informative. I want to say thank you to Ryan and NinjaTrader for allowing me to participate in this event, and hopefully there will be more to come. And if there are no questions, that's all I have. KW, we do have a lot of question was on manuals. Yes, so if you go to Tradespoon, I would go into let's go futures. It's stock forecast toolbox. So same, I mean, manuals are the same whether you trade in futures or trade in stocks. Nothing changes. But I would strongly encourage you to do two things. One, I would go and I would look at the roundtable recordings. Roundtable recordings is, with your 30-day trial, it's free. It's usually for paid subscribers, but with the 30-day trial, you have access to them. So every Friday at 10:30, we have what's called strategy roundtable discussion. You would join this roundtable discussion. It's a live event, just like you have it here, but it'll be on Tradespoon platform. And for an hour, I talk about how to use the platform correctly and how to maximize the use of our platform. If 10:30 Chicago time is not a convenient time for you, I strongly encourage you to look at the recording. You look at the recording, and it shows you how we trade. I also would encourage you to look at the trading room recordings. You can actually see how I trade, stock and options using this platform. And in terms of manual, I would, under question mark, we do have online tutorial and we have a manual. So I would download the manual, I would look at the online tutorial, and that will give you it gives example of stocks, but whether it's SPY or S&P mini, the only difference is leverage, right? Futures, you get a lot of leverage. S&P, you don't have a lot of leverage. So, but the methodology or how to use the tools are the same. Patrick will be sure to send you a recording. Thank you. John M. had a very good question. Every question is good, Ryan. Thank you. John M. had a question. What is the advantage of Tradespoon software over competitors? The advantage is these numbers, right? I don't believe, Ichimoku Cloud and even VBOX, I don't think you have statistics that tells you, well, I'll give an example. Let's say lower Bollinger Band. I'm looking at the lower Bollinger Band, and today the market touched the lower Bollinger Band, right, or came close. If you look at the 2 standard deviation move, we're approaching the 2 standard deviation move. And it's 98% of the time it will rebound. Great. That's overall statistics across all asset classes. It doesn't talk about oil or gold or S&P, and it doesn't talk about for the past 60 days. It just gives you a general understanding. So the advantage of our software is that we are trading like hedge funds. We expose you institutional grade tools at a retail price, basically, and that's our advantage. We're giving you statistics that tells you every time we have a signal, you actually know what is the probability of that signal being correct. Well, in here it's 75%. Granted, today it's we fall into the 25% category, but nonetheless you have that statistics, and that's advantage. Most of the software out there, they will give you, okay, Bollinger Band, reach lower Bollinger Band, 94% probability, but that's not true for if you ask that question for gold, and it's not true if you ask a question for oil. And the fact the volatility now is at 20, where 6 months the volatility was at 12. Looking at the VIX. All right, so John M, thank you, great question. Patrick, thank you. Any other questions? We'd love to hear your feedback. Guys, when you get a chance, go to Quick Navigation, send me your feedback, constructive, whether it's constructive criticism or just, what you think the webinar is. We do have dedicated support. 30-day trial gives you access to all of these tools, and I hope you find this informative. Thank you very much, Larry. Thank you, Ryan. Thank you for having me, and at this point, I'll let Ryan finish up. Thank you, guys.
All right, hey, this is Ryan coming back from NinjaTrader Ecosystem, and I'd like to give a special thank you to Vlad Karpel of Tradespoon for his great presentation this afternoon. And everybody in attendance today will receive an on-demand recording of today's event. Please keep an eye out for that email. The NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for all of our clients. So if you find value in these events, we would hope that you would attend them on a regular basis. I am providing a link into the room of our upcoming and archived webinars, so you can review any previous webinar there, including today's session once it's made available. And we'd like to remind you that the information provided in today's session was that of Tradespoon and not that of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. And again, we appreciate the time that you spend with us. We hope you enjoy the rest of your day and hope to see you in our future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.